Okay, so this is our Mindset Mondays for today, and certainly something that traders have to be aware of. A subject that, man, it gets a lot of people, and if you have been trading any amount of time, then you know you've had a problem with risk management and just trying to understand it, especially as a day trader, because you're trading options, and those Greeks are dancing around, and you're trying to see whether or not you should stay in the trade based on structures. For new traders, this is something that really gets them. Something that really gets them. So our subject today, the psychology of risk management. And we're going to discuss the importance of risk management and how to build the mental fortitude to stick to a trading plan. And that's right. Risk management is a part of your trading plan. It's not something separate. It's not something that you do in addition to. It is a part of your trading plan. Now, if you trade with me and the VVP trading system, you know that the levels are a part of the system, right? They make up the system. And your levels often, if not every time, if you include the areas of interest as well and the VVP indicator, the levels that it generates for you, those levels are your risk to reward markers, right? They help you understand how to trade. But a lot of traders may not know how to do that. So, like I said, we're going to have a conversation about that. This, the psychology of risk management. Our episode title will be Navigating the Trading Tightrope. Navigating the Trading Tightrope, the psychology of risk management. And so if you're joining me for the first time, like and subscribe, right? Wherever you find this on any social media platform, what have you. I am huge on mental development. The technicals, the X's and O's, I can get you to do that. I can get you pumping out 5 and 6 figures. I am confident of that. I have done it. I am doing it with other traders, right? I've done it with others. So, but what stops you, man, is that muscle between your ears. All right, that muscle between your ears. So, we want to get you to a point where you can think like a Wall Street well. That's the name of the Discord, the Wealth Wells. Think, trade like a Wall Street well. All right. So how about we start by talking about a high wire act, right? The high wire act of trading. If you think about a circus, one of the most difficult and captivating performers are the tightrope walkers, right? They risk a lot. You see these individuals suspended high in the air, walking ever so gently across this thin line, risking their lives. Some of them do not have any ropes or anything attached to them. In fact, there's, performers over history that have tightrope walked across ravines, across, caverns, across holes, across, rivers, across the Niagara Falls, even. And some made it, some didn't, right? And when you think about a tightrope walker, that is how you look when you are trading without a risk management strategy. You look like a tightrope walker, right? Now, it seems exciting, but that's high risk, isn't it? And that's exactly what you're doing when you're trading those high risk trades, the dangers that they pose. You can lose everything without a proper risk management strategy. You're just like a tightrope walker, right? And so some folks, they're very amused by these performers at the circus, but that's just what it is. It's a circus. It's something to make you laugh. It's not serious. It's not real life. Well, when you're trading in the market, that's real life. That's real life. So let's talk about the art of risk management. Why is this so difficult? Why is it a challenge? Well, you can liken risk management to financial Jenga. Do you know the game Jenga? Have you ever played that game, anyone? Jenga? The boxes, the little squares, the pieces of wood that you sit on the table, and you slide one, right? And you slide the other, and you're trying to balance, and you're trying to really take a block away and keep the structure in place. And you're hoping that the opponent, the other person, is the one that makes the structure fall or collapses, right? Well, risk management is the cornerstone to successful trading. And without it, you are playing financial Jenga. You're simply one trade away from losing it all. One trade away from the blocks falling. Is that how you feel? Now we're going to get down to the, heart in this one a little bit. Have you ever, and let me get some engagement from you guys and let me know. Have you ever traded, and be it in the beginning of your trading or even now, and each time you get into a trade, you feel nervous? Let me see a show of hands. If you're listening to this at a later time, then keep your hands on the wheel, of course. but are you nervous when you get into a trade? All right. So how about this? I got a lot of people saying yes, or used to. All right. So how about this? Once you make money in a trade and you're out of the trade, how about this? Do you feel relieved? Do you feel relieved? Do you feel like, woo, I made it out of here with some money? Do you feel that way? Do you feel like I should stop now? Do you feel that way? I should stop now. Yeah. I'm getting a lot of yeses here. You're playing Jenga, financial Jenga. It's because you don't have an ironclad. One reason for that is your risk management strategy, right? You don't know where you're getting out if the trade goes against you. Now, I've helped traders to understand the number one question in day trading: where are we going? Right? That's the number one question right before and while you're in a trade. Where are we going? After that, your question should be, where am I getting out of this trade if it goes against me? All right. It's the cornerstone of successful trading, right? It does you no good to jump into a trade blindly without any type of safety harness. That's just like a tightrope walker, right? And that's not how we trade. All right. Now, there's been many traders who have, gotten into trading without any type of risk management, or, they've stretched their risk management limits without any real structure, and they've destroyed themselves. And you've seen it. Wall Street Bets has tons of them, right? You guys remember that whole thing, right? And you see other traders on YouTube or traders online, they're theatrically, right, screaming at the at the monitor, right? They risked it all, right? Part of that is because of the psychology of risk aversion, right? Folks, just how they feel about losing, right? So let's do a little quiz here. How many of you guys enjoy getting into scenarios where you could potentially lose something valuable? How many people enjoy getting into a deal, a scenario where you could potentially lose something valuable? So that would be like someone driving in the worst part of town, right? You could lose your life, right? That's a rhetorical question. Many people, that's not something you do, right? You don't have a tolerance for those risky situations. So what do? Well, psychologically, you've been taught to avoid risk, right? You avoid the bad part of town, right? You avoid the, whatever high interest rate or the poor performing investment, or you avoid the person that may put you in danger. You avoid the person in your family that gets on your nerves, or whatever the case is, right? You avoid them, right? Does that make sense? All right. So with that in mind, you've been taught to avoid the risk, right? So we've got to dig a little deeper into the psychology of this to help you to deal with what could happen if you lose, right? And so really, you're afraid. You are afraid of taking a loss because you want to be right. And you got to come to grips with that. The best way to deal with that is to have a plan for losses and stick to your plan. I'm going to give you some tips later, 3 things you can do to have a nice risk management plan and stick to it. But, the deeper part is that you're afraid. You're afraid of risk. You've been taught that a risky side of town, a risky business deal, all these things, just stay away from them. That's the best way to avoid them. Well, that's the interesting thing of what makes day trading so hard. You cannot avoid risk, right? No risk, no reward. In the hood, we had a nice little phrase. We used to say, scared money don't make money, right? Right? You ever heard that before? Some of you guys may not be from the hood, but you get what I'm saying. Scared money, if you're scared to take a risk, if you're scared to get into a trade, doesn't make money. So then how do you do it, right? How do you do it? Well, because a person may be scared or may be nervous, it affects your decision making, and you expect to win all the time. So you don't have a real solid plan when you do get into a trade, and you may lose, right? Or it may go against you. All right. Well, You have to stick to a plan. And for those folks who are nervous, who are scared, a plan is not comfortable for them, right? It's more than just a trade plan. It's a risk management plan. It's uncomfortable for them, right? Right. And quite frankly, most people have a problem sticking to a schedule or a plan. Would you guys agree with that? Let me know. Would you agree with that statement that most people, even those listening, have a problem sticking to a schedule or a plan? Did you know the inability to stick to a schedule or plan is the entire fabric or basis of why credit card companies can make so much money? Because they know you are not going to make every payment on time, and they're going to eventually get you. Isn't that sad? They just know people. So one element to a good risk management strategy is to know yourself. You've got to do some deep thinking and be honest with yourself. I mean, it's just you, right? Nobody else is around. Are you the kind of person who likes to, just fly by the seat of the pants, so to speak? You just like to trade, risk everything. The kids call it YOLO, right? Where they get just a cheap contract, load up on it, let it go, whether they win or lose. What they don't understand is, and some of them foolishly say, well, I can afford to lose it. No, you couldn't. No, you couldn't. Because if you could afford to lose it, you wouldn't be trading anyway. You'd have all the money in the world. But what they really mean to say is they like to gamble. They like to gamble. Now, on the one hand, a person playing a game, nothing may be wrong with playing a game, but on the other hand, they're not paying attention to the behavioral patterns that it's developing. So you have to look at what you're doing in your life and if it's fostering an environment to properly manage risk or stick to a schedule, because that's what risk management is. Risk management is, I have a plan, an if-then statement, or a plan for when this trade goes against me, and I stick to it. I don't break the plan. I don't go against it. I had a trader once ask me for help because he kept moving his stop loss, or should I say up to that point, he keeps moving it or kept moving it. So I decided to do a YouTube video about it. You can check it out on our channel, the Wealth Wells day trading channel. I keep moving my stop loss. Fix this, right? And I also put that on our Mindset Mondays or our podcast for the Back Pocket Knowledge series, because I thought it was that important for people to understand that when you move your stop loss, you are negating your risk management strategy. Right? It's just gone. So let's discuss a few common reasons why traders deviate from their plans. And we're going to talk about the consequences. So I actually want to get your opinion. Let's get some engagement here. Why do you think traders, or why do you deviate from your plan? What causes you to move that stop, or to change your risk management strategy, or to trade without a risk management strategy? Now, this is going to take some honesty. Nobody wants to speak up, but what causes you to do that? Now, someone says fear or greed. Certainly, someone says hopium. You hope it will come back. Well, that'll kill you. Others say greed. Yes, some say one that's very popular, not wanting to be wrong. Or how about hate being wrong? Someone that I coached recently said they hate being wrong, so they know that's hurting them. Others say it becomes a habit. Yes, you've developed poor disciplines. Yes. These are all common reasons why people deviate. Some of the more prominent ones, at the core, it's fear or greed, for sure. But some of the more prominent ones will be hopium. They have a false sense of hope that they're going to be right, even though all the data suggests that you're wrong. And here's what happens with the brain. The brain can trick you, right? Because you can actually win one trade and lose 10 trades, but statistically, your brain doesn't do the math the right way. Based on emotions, experience, upbringing, background, your brain actually will skew the results and say, you know what? This might be the chance it comes back, even though 90% of the time I fail. I think this is the one. And then it fails. And then the next time, you know what your brain will say? I think this is the one. And then the next time, and you'll do that over and over, right? And so people hope, right? That's for sure. And then another big one is pride. You just do not want to be wrong. You don't want to be wrong. You know what's interesting about trading in the market is, what if you're right every month? Let me ask you guys something. If you knew that you could take whatever amount of trades, but over the month you're going to come out green, would that be satisfactory to you? Would you be okay with that? Would you call that a good trader? Someone who every month, not every day, every month is green. Is that a good trader to you? Or maybe even every year. Is that a good trader to you? Yeah. So a lot of times traders have to look at the high level, right? You're so caught in every single trade, you haven't given thought to the high level, right? And the bigger picture is what we call it. The bigger picture is you're trying to be a profitable trader over a sustained period of time, not every day, not every trade. Now, it is possible to be green every day. It takes work. But it is not possible to win every single trade. It is not possible mathematically and humanly. It is not possible unless you trade one time a year, right? And in that case, over a 10-year stretch, you are still going to miss a trade. It's just the way it is. So the reality is, those are the common reasons. You stated them there, you agree with it, and we've already highlighted some at the top, right? Now, for me personally, I've had to, this is a personal subject for me, as many of the Mindset Mondays are, because this is one of the sheer reasons in the beginning that I lost a lot of money in day trading, right? To the tune of about $500,000, right? When it was all said and done. But my first couple of trades, I remember losing about $170,000, right? And did you know, I just knew I was going to win. I knew I was going to win. And for all intents and purposes, the trade came into profit, and I did win the trade for a little bit. But you know what I did? I bet you can guess. I bet you can guess. I took that mouse, I clicked on the screen, and I moved that stop loss. Yeah. I said, well, maybe it'll go. The trade retraced, and it wasn't a retracement. It was a reversal, right? Has that ever happened to you? So I know all too well of learning the hard way how vital it is to stick to a plan. So what will help you then? All right, here you go. What helps with risk management and sticking to your plan, because that is what risk management is. You have a plan for winning and a plan for losing to manage your risk. Whether you win or lose, it doesn't matter. It's about the risk. You have to build mental fortitude. Build mental fortitude. Say it with me. Type it in the chat if you're hearing me. 3 words. Build mental fortitude, right? It means you have to strengthen your mental ability to trust your plan and stick with it and find joy in it. You have to love it. You have to be excited about, all right, hey, I exited, I took a loss, but I'm so proud of myself, I stuck to my plan. And you have to track that using a 90-day Wealth Day Trading Journal or whatever, so that you can give yourself a pat on the back. You need to see rewards from execution, not rewards from making money. To do that, build mental fortitude, all right? So from this point forward, you're going to kind of think of yourself as a risk warrior, a risk avenger, someone who champions risk, someone who would never, ever trade without risk, someone who's going to love and enjoy managing risk. Not someone who thinks about risk second or third after they get into a trade, right? You're going to have to develop the mental strength for that, all right? So here's some practical tips and exercises for developing mental resilience and to managing risk. I'm going to give you 3. 1 or 2 will be simple. 1 or 2 may be hard. It's up to you, but I'm going to give you 3. The first is hard stop loss with alerts, an audible signal, an audible sound. Hard stop loss with alerts. Okay? That's the first. You oftentimes hear alerts going on in the background for me. These are entry and exit signals, hard and digital stop losses. Now, you may say, yeah, but I keep getting stopped out. That's fine. This means that the good news is you have a risk management strategy. The bad news is, or not even bad news, the opportunity is now we can adjust it. We can adjust it.
Okay, the wicks get me. All right, so we've got to show you. Maybe we develop 3 risk management strategies for you. 1 for directional days, 2 for range days, 3 for low volume chippy wicky days, right? And you simply pull out the one that's appropriate for that day. Have you ever thought about that? Have you ever thought about developing multiple risk management strategies based on the action before and after the opening range? Try it. Try it. This is why I have KD's setups, which is straight up 1 hour training of my secrets and my setups on what I look at. A person doesn't have to go through my stack of training. They can just take those setups. Of course, they go through the stack, the core training, it'll work even better. But those setups are there because someone may want to just, hey, you know what? Folks may just want to say, I just want one setup. Cool. Well, just like I have multiple setups in my tool bag for trading activity, I have multiple risk management strategies. Not a lot, but a few based on the activity of the day. There are some days I say, I'll let this breathe. I'll let this relax. You've heard me say it. Other days, I have a tight stop. You've heard me say that, right? That's an example of different risk management strategies. Tied to that is going to be a hard stop with alerts. The audible alert is a warning. It's a signal, right? It's warnings and alerts audibly. They engage other emotions. They engage other senses. It's the reason why when a public service announcement comes on, it doesn't just flash on the TV. There's a annoying, very deafening sound, right? Right? You heard that before, right? If there's some type of alarm or some type of national event, sirens go off, right? There are things to engage you to wake you up. And so an audible alert will help you. How do you set that? Well, you can set the alert feature on TradingView in addition to your trading application. So if you got a couple of them going off, you'll know, hey, get out that trade. That's a simple one. The second one's going to take some deep thinking. It's getting to the root cause. You need to sit down and write down some elements and things about yourself in relation to losing. Because a lot of times folks don't have a risk management strategy because they don't like to lose. They don't like to lose. So you need to get real with yourself and journal. In a personal journal, not your trade tracking journal, but a personal journal, write down why you don't like to lose and start ironing it out, getting some coaching behind it, getting some development behind it. Because ultimately, I can give you all the tips, but you've got to fix that thing between your ears. The third suggestion is an accountability partner, a spouse or a friend, to review your trades every single day and hold you accountable. If you're messing up, hey man, look, you keep messing up. You're doing well, hey man, look, you're doing really well. People act differently when they have someone holding them accountable. People act differently. They will. Right? It's the premise of having a manager, an overseer, a boss, right? Someone who is overseeing the activities, whatever you want to call them, a director, CEO, whatever. People act differently. Because most people, again, aren't good with planning. They aren't good with the schedule. They need someone to say, hey, do this at this time by when. So lean into that. Don't try to be Superman or Superwoman. All right, I'm going to work on that. I'm going to get better at that. But in order to do that, I'm going to have somebody else just hold me accountable. If it's KD, cool. Get into a trade plan, get into some one-on-ones. You know me. I'll keep it real with you. I'm realer than a $2 bill, and I'll tell you what the deal is, right? But if it's not, it could be your spouse. It can be a trade buddy. It could be someone else, someone you meet in the community, to hold yourself accountable and review your trades with you. Those are the 3 suggestions we want laundry list. Number 1, physical hard stops and alerts, period. That's the start. You can always work from there, but that's the start. Number 2, some very deep thinking and journaling, getting to the root cause, why you don't like to lose. Why am I doing this? What have I gone through in my childhood? Who told me that I have to win all the time? What am I trying to prove to others and to myself? These are a few questions you should ask yourself and write down. And then when you do get into a one-on-one with me or someone else, but specifically myself, when we build your trade identity, we do a lot of psychology training and things to help you with the mind. And once we give you the tricks and the tips, you can start hitting these stairs and then hurdles. And then the third is an accountability partner, a spouse, a friend, all of that stuff, right? It's going to help you review your trades every single day with them, every single week with them, and make them hold you accountable, right? Now, I don't know if you've ever heard of someone called Leeson. You guys ever heard of a trader by the name of Nick? Listen, yeah, he was a young trader in England's Barings Bank in 95. He lost 1.3 billion with a B, $1 billion, billion of the bank's money in risky derivatives, unauthorized derivatives trades. He was over leveraged. I mean, this guy was as risky as it gets, right? And he's well known in the trading community as a lesson of what not to do. Well, his trades made the bank very vulnerable. The bank collapsed, and Leeson, he spent 4 years in a Singapore prison. Yeah. His crimes and his lack of risk management bankrupted Barings. Now, some of you old heads may remember Barings Bank. They ain't around anymore. Collapsed after 230 years in business. Did you hear what I said? 230 years in business. So we're talking about Great Depression. We're talking about economics. We're talking about economic fallout. We're talking about wars. We're talking about it survived all of that. But you know what brought this bank down? A dumb idiot that had a poor risk management strategy motivated by fear or greed. His actions forced the banks all around the world to reassess their internal controls and trade auditing procedures. Yeah. His record trading loss held until 2008 when a French trader blew through 8 billion. We'll talk about him in our next episode. He pled guilty in 95 and was sentenced to 6.5 years by a Singapore court, and he was released in 1999. I don't think he can get a job, though. I'm just saying. He's probably still trading somewhere. You know that? He's probably, still kind of going through the motions. But did you know that's not the end of the story? Why do you think Nick was so risky? I want to know if you're listening to this right now and you can respond just in your head, or maybe you can type it up. Why do you think this guy was so risky? Hubris. All right. Why do you think so? Why do you think so? Just give it some thought. Someone said pride. It wasn't his money. Okay. Now, he was successful leading up to that. I mean, he did work prior to Barings. He held various positions for various banks like Morgan Stanley, right? And of course, Barings. He also became a star derivative trader at 27 in the Singapore office of Barings Bank. So he was ripping it. Don't get me wrong. He was doing some things. He rose through the ranks. He, winds up as a general manager of that division over there. Why do you think? Someone said ego, didn't think he could fail. Someone said to be big, the big man in his shop could. Not enough oversight. Well, did you know, and just hear me out here, do you know who his parents were? Notice how nobody responded with his upbringing. Did you notice that? Did you notice that? His father was a plasterer and his mother was a nurse. Instead of attending college, after secondary school, he became a clerk at a bank and worked his way up from there. His father was a tradesman, a plasterer, and his mother was a nurse. These are blue-collar positions. Do you think that may have had a little bit to do, in his case, with his view of money and having to prove something? Do you think? The answer is yes. You can look his story up online. It's a pretty interesting story. We'll talk more about him and other traders later. But the ideal is he shows you a very great example of what not to do, right? He brought down an institution that was 230 years old. And boy, oh boy, he will forever be remembered in history as what not to do when it comes to risk management, right? Well, that's lessons from a risk management failure. Don't be that guy. Don't be that girl. What do you need to do? 3 things, as we discussed. Set hard stops and alerts. Even if you keep getting stopped out, that's something we can work with. The alert will engage extra senses to make you stop. Number 2, do some deep thinking, journaling, getting to the root cause of what is causing you to do this. Why do you think you need to win every time? And why do you think you're so special you're going to win every trade? The minute you get over yourself and hold yourself accountable with some coaching and development, you'll be fine. And then number 3, an accountability partner, someone who's going to be real with you. Don't go talking to your high school buddy who's 19, 20 years old, and they're like, yeah, bro, let's risk it all. Don't go doing that. Get someone that's responsible, and quite possibly someone who's not even in trading at all, who has no idea of what trading is, but they know you. For me, it's my wife. She would make an incredible trader and investor, but that's not her jam. That's not what she does. But she is my accountability partner. It is tough at times, but she will tell me the truth. Hey, I think you're getting in over your head. Hey, I think this is going to hurt you. She's so kind and sweet when she says it, but it cuts to the core. And we all need that. You need someone to tell you when you're not smelling like roses, that you're not the best, that you're not the greatest. And for crying out loud, do some deep thinking about your upbringing. Just like Nick, the guy was a rock star, but he could not escape his upbringing. He could not escape the mental effects these things had on him, and it reared his head in an ugly way, causing him to go to prison. This has been our Mindset Mondays discussion about psychology and risk management. We've discussed the importance of risk management and how to build the mental fortitude to stick to a trading plan. I've given you 3 steps, and we've discussed how you're really playing a circus game. It's a tightrope walk. You're going to fall at any time. Each time you get into a trade and you feel nervous and hoping without a proper risk management strategy and plan that you're sticking to, it's like playing financial Jenga. You're just one block away from everything falling. Navigating the trading tightrope, the psychology of risk management. This has been our Mindset Mondays. Let's get back to the market. Hopefully this was helpful. KD, signing out.